Hi, everybody. Welcome to our March webinar, which we're really excited. Today, we're going to be talking about a really cool manual or treatise called Question the Question. It was put out by Octopus Ventures, and we're privileged to have Priscila Bala from Octopus Ventures with us. Good morning, Priscila. How are you?
Oh, I'm good. Thank you so much for having me. It's a pleasure to be here.
Absolutely. So for those that haven't been a part of our webinars before, and we have people from all over the world, and we're excited to have you with us today. We're going to have a good conversation with Priscila. We invite you to share any additional questions. And many of you have already submitted some. We'll be addressing those towards the end, but you can certainly use the chat feature in YouTube to add additional questions, and we invite you to do that. So, Priscila, let's hop right into it. I know people are really curious about Question the Question, and you all have developed this obviously for some specific purposes, and I believe this is the second edition. Is that correct?
So that is right. So we launched the first edition last year, and this really came out of the work that we do trying to help our own portfolio companies think about internationalization and expand in the US. So if I take a step back and just give you a little bit of background about Octopus and what we do. So we are one of Europe's largest early stage investors. We have about $1 billion in assets under management to invest in early stage companies, primarily seed and A, but we follow through throughout their life cycle. And one day, sort of 2 years ago, before the office here was founded, the partners realized that a significant amount of the money that we were deploying in Europe was actually getting spent in the US. And that's where the idea of really building a center here in New York and being a linchpin for this ecosystem of support in order to really understand what are the best practices, what are the challenges, how can we help our companies be very effective in their expansion really was born. So I was the first US hire. And initially, a lot of the work that I was doing had to also do with even understanding what does my job really mean. When we talk about challenges of internationalization or when we talk about US expansion, what are some of the problems that really resonate and what is it that entrepreneurs can solve on their own versus where is it that they would have appreciated support? And so we went on a mission really to talk to over 100 VC-backed European companies that had expanded to the US and started documenting a lot of the findings, the patterns of success, the challenges that we saw, and building a library of resources to support our portfolio based on those findings. Then we decided, we might as well help as many people as we possibly can, which is why we published the first edition sort of in October of last year, and then, of 2017. And then last year decided to do a bigger refresh to expand, particularly the insights we had further developed on fundraising and on building effective teams.
That's fantastic. So yeah, I'm just looking at, you can see my version. I've got lots of highlighting, pages folded over. Yeah, there's tons of great information in here, and clearly a lot of research. There's a lot of direct quotes from many of the interviews that you had. So it's sort of very real. It's not, I think there's a lot of data, but there's also some true experience that people had, very individualized. So before we hop in too much into Question the Question, Octopus is very large. You've got a large portfolio of companies. The last time we spoke, you had about 25 companies in the US. What's the number currently?
Yeah, so I would say it's close to 30 now. So it's about 30 of them. So our portfolio has been expanding. So we have a generalist technology portfolio. So half of it B2C, half of it B2B, a lot of different areas: digital health, insurtech, fintech, cybersecurity, prop tech, hardware, software as a service, marketplaces, you name it, we have it. We're about sort of 80 active portfolio companies at the moment. And I would say, sort of a little over a third, close to a third of those have a US presence or are considering an expansion at the moment.
Got it. And so your team is charged with what in terms of supporting those companies? What's the sort of the sort of the various services or support you might do for
Yeah, no,
portfolio?
absolutely. So primarily, sort of our primary mandate is really being advisors to them in that international expansion. And that includes everything from sort of the strategic insights at the outset of really thinking through, does internationalization make sense? If so, should it be the US? If so, how are we going to do it? With whom? At what time? How much resource to put in? So we really participate a lot on the strategic thinking and planning for making the decision. Once the decision has been made, we also help our companies by providing a full array of resources around implementing that or executing that expansion really effectively. So we have a roster of service providers, discounts, benefits, advisors, candidates that would be open for joining their teams to really help accelerate that notion of, once you're on the ground, we want you to hit the ground running and go through those stages as swiftly as you can. Then after that, we also work with them on the ongoing sort of go-to-market strategy. So bigger resources on now how to operationalize and scale up processes that might be different from Europe, helping them think through the regulatory environment, and then helping them recruit. I will in many cases interview a lot of people for my teams, and then most importantly helping them fundraise. So the truth is, once our companies are established in the US, one of the big things that we offer and that we know from their feedback that's of value is really brokering those connections to other US investors who could syndicate with us and follow on rounds of funding. And we are, we have a vested interest in creating as wide and as big a network of support for our companies as we can. And so I spend a lot of my time with my American counterparts thinking through, what are their metrics, milestones, how to manage the process, which companies really are a fit, to try to expedite that process. As this audience and you probably know, sort of fundraising can be one of the most time-consuming and intensive processes for a startup. And so to the extent that we can shrink that window of opportunity, give them a lot more focus, help them with best practices, we do a lot of that as well.
Yeah, oh, that's fantastic. And that's actually a really good segue to the first part of the book, which is really about making the decision, and ultimately, at least from what I read, a lot of what you do is back up the train when they say, "All right, you want to go to the U.S., but is that really the next best milestone?" Why is it that you kind of question the question?
Yeah. So because the US is such a large market, right? So when we talk about global technology spend, we talk about its sheer market size on a consumer basis or on an enterprise level. It is a very attractive morsel. It also has a lot of talent. It also has a lot of capital. And so a number of entrepreneurs start from this base assumption that it would be, inevitable that they would go to the US. And it's almost like some folks see it as a rite of passage, that if you have ambitions to become a market leader in a global company, you must go to the US. And the reality is that the US might be a step on that trajectory. And, odds are it will be a step on the trajectory of all of those ambitious global companies that want to disrupt a market. But the truth is that once you actually look at the data and the numbers, the US can be the graveyard of is the graveyard of more companies than it is sort of the bounty that they expect it to be, right? And I think for us, really questioning the question really came from this understanding that we saw that there are a number of assumptions that are made about the US market because it feels familiar, because we might speak the same language, because we've watched Hollywood, because we read about it constantly, that gives you this false sense of confidence that it's going to be a market that's very much like your own. And the practice of it couldn't be farther from the truth, right? In many cases, the US might cannibalize your domestic product. It might create divisions in your team. It might make you vulnerable in both places. And it's going to take a lot more money and a lot more time than you think. So for us, it's really this notion of, encouraging our entrepreneurs, because honestly, we can't do anything. We're minority investors. They're still going to do whatever they want to do. But we hope to build enough sort of goodwill and credibility with them that they will at least listen. So, we just want them to be prepared, and we want them to do it with eyes wide open. For some companies, it is absolutely the right answer. And for most companies, it is the right answer, except at the right time. And the right time is a really critical piece, that in the beginning, when you're really excited and you started to see some traction and you feel like you can't miss out on this opportunity to be in the US, you might make the decision a little bit more quickly than otherwise.
Sure. So I think it sounds to me like there are really almost two major points. It's sort of, one is the timing correct, and is it the right decision? But ultimately, is the timing correct? And then two is the execution correct? Because I mean, that you could have the right timing and everything, but there, as the question goes into, there can be so many other hazards sort of on the way to the pot of gold. And so let's maybe talk about the first one in a little more detail first. And so when companies are going through that process of deciding the next major milestone, and of course they walk in and say that we got to go to the U.S. is maybe what you hear quite a bit of. What's the process from there to sort of help them make the best decision? Ultimately, is I'm sure you're very much incented to help them make the best decision for the company. So how do you do that? What's the process?
Yeah. So for us, a lot has to do with this assumption. Back to your point, like, it's really just asking the basic questions of why is it that you want to go, and trying to push on, are these answers really true, or is it a general sense of FOMO? Is it really based on assumptions that are, because we've seen it all, right? And but there is a sense of, the thing that I'm watching for at that stage is ensuring that they're not simply changing the geography of an underlying problem, right? What you don't want to say, because sometimes a typical scenario can be, they're getting traction and they're feeling good because they're getting some results, but it's not as fast as they want, it's not as quickly as they want, and they think if they just could go to a bigger market, that's going to fix it. And in many cases, unless you understand exactly why is it that you're not picking up the speed that you needed to pick up, odds are it's not going to be faster in a bigger market. And if anything, it might be even slower, because now you're going to be diluted amongst all of the American startups, the international startups that are trying to do everything that you're trying to do, and so on and so forth. So initially, a lot of it just simply has to do with, can we step back and think about all of these reasons, and can we then push on understanding what are the real causes of what we're trying to do? Then when we step into going, okay, so you know what? It turns out we do believe the US is a really great market for you. And if we execute correctly, it could be a tremendous opportunity. So now let's start thinking about what that might look like. There is that notion of, are you allocating resources effectively? Because there is this myth that, well, we're going to start and then it's just going to pick up and you're going to build it and they'll come and it's going to self-finance and so on. Well, so this is where the education and of all of the work that we did, and we really wanted all of the work to be incredibly practical and battle tested, right? This wasn't about an academic exercise. This isn't about a marketing exercise. This is about what works in the real world, in the wild, with some of the most talented people in the world. And even those people struggle like crazy, because what you're up against is a really, really, really hard challenge. So are you properly resourced? Have you allocated the amount of time? Do you understand what the impact on your domestic business might be? Because we think it's really important for them to know that there is no such thing as a free lunch. Sort of investing in the US is going to cost you something, and are you ready for the trade-offs? If you don't have, a self-developed managing team in the domestic market that's going to keep the business running in a way that's very effective, odds are you're going to have to sacrifice it. And either you're going to pick up and go and you're going to effectively become a US company, and that's going to be your sole focus, and you have to say goodbye to what you had before, or you need to already have that team in place such that they can sort of live without you, and you're going to be off trying to figure out the US and building it in the US. But if you don't have that as a prerequisite, you have to be really careful about trying to execute that move. I'm going
Mm.
to pause there because I don't want to talk too much unless I'm answering the right question.
Yeah, no, no, I think that's really interesting. How much it strikes me that when you're going through this process of assessment, that you might also look at a variety of alternatives. So, okay, so they walk in the door, they they see the mermaid on the horizon. They say, "We got to go to the U.S. It's so cool. We're going to grow like mad. We're going to go and all buy yachts, and life is going to be good." Um, but do you do much work in, I get the idea of sort of walking them back from the cliff, but do you do much work in terms of what would be alternatives? What ultimately,
Yeah.
entering a market or doing any sort of
Yeah.
growth exercise is not really about that. It's about creating some financial outcome. So
Yeah.
it's so what's the financial outcome, and then how do
Yeah.
we what's the shortest path sort of to that? What
Yeah.
do you do in that regard as you're sort of
Yeah.
questioning the question?
So that's an excellent question. So a lot of what we do is really thinking through, when they come to me and they're, oh, we're super excited. I'm like, great, we're excited too. Here's what I want you to prove first. And and that list tends to include a number of things that historically we see a number of teams underplan and underutilize the opportunity to just do things from Europe. The reality is, the moment you put foots on the ground and the moment you sort of register in the US, costs are going to double, and things are going to be a lot harder and a lot more expensive. So the first thing that we challenge them to do and encourage them to do is really think through, what are all of the tests and milestones that you can do. Sorry, did I freeze for a bit, or you could still
Nope,
see
you're
me? My
good.
computer went to sleep. Okay, good. What are some of the tests that you can do from Europe to really validate this process, right? So the first is, you're going to sit tight at home and you're going to start going through the process of, setting up a little SWAT team that's going to be discussing what this localization and sort of what a US launch or expansion might look like. Because I want you to be aware of the cost on those people's time, resource, energy, and the fact that you are paying for that. Even if you think you're not sort of spending extra money to hire someone to do the US, you're taking those resources away from elsewhere. So you're going to have this little fighting team. You're going to come up with a plan, and we can then design what the milestones might be, right? But the first step will be trying to test the product from Europe. So it's going to be, what does the US customer journey look like, and have we validated that? Can we get customers from the US? And generally, we will tell people is, until you can get a few customers, prove that your pricing is going to work, because in many cases, we've seen the business model fall apart once it comes, because the economics are very different. The value that as customers might assign to your product in Europe versus the US might be really different, because the competitive situation is different, because the shape of the industry is different. I mean, we had one case in which, there was an intermediary in the US that basically controlled a lot of the power and the economic value of a particular transaction. And our company was doing super well in Europe, growing like crazy, managed to fundraise 10 million from a US investor just to do the US expansion, and completely die on the beach because the business model didn't work. And again, these assumptions that your customer acquisition cost is going to be the same, completely false, right? Again, the US spends a lot more in marketing than other markets do. So it's going to be competitive. It's going to be difficult. You're going to be up against a number of other people. So you have to lean in on external resources, which is where, again, service providers, consultants, contractors, part-timers, to test some of this stuff and go, okay, what are the mini incursions we can start doing to figure out what the feedback from customers is? Are people really putting money down? And how many conversations can we really have remotely? And try to phase it and be willing to determine, okay, here are the milestones that we're agreeing to for the next 3 months. At that point, we're going to reevaluate. And if it's not working, we're going to walk away. And then, the next ones. And generally, a good team will take, anywhere from 6 to 12 months to really even come to the full decision. And we've had a number of situations in which the process led them to, started them thinking about other markets. And to your point, they ended up deciding, guess what? We're doing all of this work for the US and we like these pieces. And now we're looking at Sweden. And Sweden would be a much easier way to implement some of this stuff that we're doing because, it's a smaller market, is more centralized. Let's try that first. And now, sort of 2 years later, they're coming back around and going, okay, we have the learnings from Sweden. We know what internationalization looks like. Let's now tackle the US.
Yeah, yeah, no, that makes sense, and it's one time zone away, or whatever the case might be. But there's a lot sort of lower weights on the current infrastructure. So is part of what I'm hearing too is even getting one internationalization under your belt before going to the U.S. for some companies, or even getting a few internationalizations, is maybe an alternative strategy that you look at.
Absolutely. It definitely can work, right? And what we're trying to do is really open up people's field of vision to go, it's almost like the Odyssey, right? Odysseus knew where he wanted to start. It took him 10 years and he had to go, all over the place. But the reality is it's only exciting because he had all of the other adventures along the way. Who knows if he was ever going to make otherwise. I think you have the journey or you have the destination in hand, but it's important to be flexible about the journey. And it's also important just to be flexible with, people misunderstand what some of the biggest, causes of death for startups are, right? And, actually this would be a fun thing. Can people put in the chat, what do you think some of the, what is the top reason for startup death?
Yeah, so I'm just looking now. Yeah, please, if you would, just type in, and I have another screen for this, so I'm looking to the right, but type in what you think the #1 cause of startup death is. And we'll come back to that. Why don't we come back to it in just a couple
Yes,
minutes?
as in a couple of minutes, we will do that.
Yeah.
So the idea is, interestingly, people mistake the fact that initial traction does not product market fit make. And that getting a certain number of customers doesn't necessarily mean that your company will then be able to scale to the next scale up milestone and the one after that and the one after that, right? The bigger the market is, the easier it is to make that mistake, because the share of innovators, right? Like the people that just are at the cutting edge, that just want to try new things, that want to see what it looks like, that have a little bit of, budget or income to put towards that, the higher that is, again, the easier it is that you're going to misread the signals, right? And until you have had the opportunity to really go through some periods of churn, repeatability, really seeing what the patterns for what the customer retention is for you, the harder it is to really understand whether you have that product market fit. And so the challenge is when a lot of our companies or companies in general start getting to that 1, 2, 3 million mark, they're feeling really great. They're like, we got this. We found our product market fit. We can now expand. The truth is that could just be the share of innovators that we're talking about, but it could still mean that you're going to have a really tough time expanding the business after that. And now, instead of focusing your energy and resources and focus and product development and strategic time of your executive team on really fine tuning, what that experience looks like and making sure you're solving all of your customers' problems, you've changed your field of view to do something entirely different someplace else. Right. And I guess as I was mentioned, the challenge is until you have kind of unless, again, sacrifice the market. So the biggest pattern of success, the one that we sort of like put our hand over the fire on these days, is precisely that one that we really encourage people to go, okay, if you're thinking about the US and you're an early company, either consider if the US is your primary market and in effect sacrifice your European position, just resettle and become an American company and focus on an American consumer, or really build a domestic business, to a level that's going to be self-sustaining, that gives you a lot of those metrics where you're no longer betting the house and then go nuts. You can do whatever you want, right? So one of the most successful sort of US expansion stories that we had was for our company Graze. Graze did everything from Europe, right? Sort of there are snack by subscription company. So they started initially shipping snacks to Americans from the UK. But they were willing to say, okay, we're going to spend, we'll call it £100,000 to test out what this is going to look like. And we're going to create an Americanized website. We're going to connect them, to make our customer service have sort of American hours. And we're going to start shipping and testing what this looks like. And because the signals were very strong and because the business at home was already doing sort of 20 to 30 million in revenue, they were able to then say, let's do it properly. And they had the capital to actually finance a lot of it. So they managed to scale up in the US in a matter of a year to 20 million in revenue, right? Because they knew what they were doing. And it was much simpler to just put fuel under the fire. But when you're trying to, at the same time, answer questions about your first product, the processes, the network, and build credibility in a new space, it can be really tough.
So it's sort of a multi-front war, which is never a good thing. So let me ask you one more question, and then I'll take a look and see what our folks responded. But you had mentioned kind of earlier in that segment about sort of maybe getting a false positive in the new market. And how do you have people test that the results they're getting to assure that they're not getting false positives? What's the process there?
Yeah, so that's going to vary a lot, sort of unfortunately, sort of context by context, industry by industry, and depending on the stage of the companies that we're talking about. A lot of it has to do with the stickiness, or we can think about, the stickiness of some of those relationships. We can be looking at, in cases where you have multi-year contracts or platforms that you've done integrations and it's really hard for the customer to now walk away, we tend to be a little bit more lenient as to what that, how much churn, repeatability, or some of these other things you might want to see. In cases where it's really when there are none of those barriers and it would be very easy for customers to just walk away from your product, then we would want to see, a variety of different things like really high NPS scores, how much of your customer acquisition is coming from word of mouth versus, paid acquisition, what is the level of your CAC cost to what the long-time value of those customers is. I mean, you try to stress test it. And again, the parameters about how strict or sort of what our advice is going to be is really bespoke to understanding sort of what kind of product are we talking about. But by and large, I would say it's truly this measure of stress testing this and looking at the sensitivities of, if we were wrong, what's going to happen and what is the price that we're going to pay. And if we are right, do we really lose a whole lot by waiting another 6 months or by waiting another year? I think there's a huge, I don't want to call it a myth, but Silicon Valley has hyped up this notion of first mover advantage to a very unhelpful degree. And the reality is that in most practical situations and in most of business and in innovation, first mover advantage means nothing. It's really first to product market fit. And first to making a customer so happy that they evangelize the world about your product.
Right.
And if it means taking a little bit longer to do it, that can, in most cases, in fact, not only be the best strategy, but be the strategy that was the best from the outset, right? Trying to rush to be the fastest when, again, the economics are not going to work, it just could mean throwing good money after bad.
Yeah, usually there are a lot of miners that fail on the way to finding the gold, for sure. But so here, let me share some of the responses we got to your question about why businesses fail. So the first one, poor product market fit, then run out of money, cash flow crunch with enterprise customers paying late, not understanding the existing competition in the market and how your product is different or better, and then tech companies great at future have to get with today. Generally poor at bridging to tomorrow, which is where they run out of cash. So it seems like several are talking about cash as being a problem, and then others product market fit.
There we go. So everybody gets a gold star because ultimately it is really sort of this is the product market fit, right? It's the idea, as we were discussing, that you think that some of the signals are really positive. You throw a lot of money behind it, and it turns out that wasn't the case. So and definitely, as you were saying, all of the cash challenges stem from that, right? It's overly aggressive and positive budgets that assume you're going to sell a lot faster that you're going to. So, and if we wanted to be practical, back to what we were saying, is the encouragement that we have is we try to play devil's advocate with a lot of our companies, right? And go, okay, if we had to truly stress test this and question all of your assumptions, and if we had to double every single sales cycle that you put in here, and if because it's going to happen, right? Everyone says, oh no, it's going to be great. It's going to ramp up like this. And it's like, sometimes it will, but sometimes this early leg is a lot longer than you think.
Salespeople are optimists.
Oh, very much so. And innovators and entrepreneurs should be optimists.
Of course.
And we, what we're trying to do is pretty insane.
Right.
But we love it. And this is what fuels us. And yet it's good to sort of just have this idea that you want to build behind success. And so, let's not drink our own Kool-Aid, and let's start stress testing some of these things and assuming, and particularly for the US, we like to tell our companies, like, the rule of thumb is 2 million in 2 years, right? If you don't have 2 million to spare and 2 years to spend on it, it's not going to be the right time to think about it, because that's going to be, sort of a baseline of effort and resource that you're going to have to target towards this.
Yeah, that's a really interesting rule of thumb. I like that. So we've talked about the product market fit. We've talked about cash to some degree. It seems like the third really critical leg of the stool, and one that you spend a fair amount of time on in Question the Question, is the team, and the whole sort of balance between the team from the home country, from the founding team or key leadership, and then the in-country team. There are certainly folks that move an executive over. There are folks that make their first hire a native of the country. How do you decide? How do you figure all that out? How do you guys work through that?
No, that's a great question. So we'll talk about team now, and then remind me to come back to cash and fundraising, because I would love to talk a little bit about fundraising if it's helpful to folks.
Sure.
But so let's talk about team. So how do we think about that? It also, again, depends on the industry that you're in and whether you're a B2C or a B2B company. But I'm going to generalize just to give us some principles here. So on the B2C side, it tends to be a lot easier to build traction entirely from Europe, right? If you are being distributed via a marketplace or a central distribution channel like an app store, or if you're trying to build a brand, sometimes you can do it entirely from abroad and you'll be perfectly fine, which is important because it means you will have enough traction in the US to hire really good people. What's the problem of sometimes hiring someone locally, or having, hiring an American as your first person if you're coming from Europe? Tech is booming in the US. The good people have job offers from the large and established tech companies, the super well-funded American companies, and from a number of other startups from all over the world. If you cannot demonstrate traction in market, the people that you're getting, to be pretty blunt, are probably not the people that you want, because anyone that's worth their salt and that has experience has an abundance of options, right? At this moment in time, particularly people that have experience scaling up companies, it's a buyer's market in their favor.
Hmm.
Right. So, which is why we see sort of compensation costs being so high in this entire expansion of what benefits packages are going to be and how you think about stock compensation and so forth. So, the idea is for a BTC company, if you have extensive market data and you can show to them, here's our CAC, here are our customers, look at the traction that we're getting, look how successful we are, it's very likely that you can convince someone who's really good to jump ship to help you build that piece and become sort of the GM for the US. Without that data, I would be very, 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 very careful because in startup land, you know, life cycles happen in months. And if you hire an American and it takes you at least 6 months to figure out, even if it's going to be working out and what traction are they getting? Are they embedded in the team? Do they understand the value and the culture? By the time you go, oh, holy moly, this wasn't the best hire, or this isn't a fit, and you have to fire them and you have to find someone else, and then you have to have someone else be on the seat. Guess what? We talked about 2 million in 2 years. You've already lost one of those. Right. So it's an incredibly tricky proposition to make. The second challenge that you have when you're establishing the new presence with an American is that you're going to miss out on having that culture that was built at home, the lessons that have already been learned throughout the process that you've had to date, and the sense for what your values, what your mission, what your objectives are, sort of embedded into the team in the US. And what you see happening, unfortunately, quite frequently, is that you end up with two organizations that are operating under different cultural behavior, sets of practices, and that can create immense frustration, a lot of resentment. It can slow down decision making. You're not going to be sharing information in the amount, in the amount that you need. You're not going to trust each other in the sense, to the level that you need, and it becomes really ineffective. Because the US is also a bigger market, we've seen this happen in a lot of cases where, once the revenues of the American operation reach or exceed the ones of the foreign operation, there's some resentment that can built in with the fact that, hey, we're carrying a lot of the business, but all of the decision making and all of the executive calls are happening elsewhere and we're not part of it. So it just creates a lot of challenges, right? So our recommendation by and large is to have, it's paramount, right? It's not a sufficient, but it is a necessary condition to have founder DNA, executive DNA from the company on the ground, which is why this question of, are you willing to sacrifice, the work that you were doing in the domestic business, or are you willing to really spend this time going back and forth between the two to make this successful? And again, people really underestimate how painful those plane rides are going to be, and how challenging you will feel even for them to all of a sudden feel like they're out of the loop of what's happening in Europe, and having to spend a lot more time with the coordination and communication aspects of that process.
It probably amplifies how important a good and strong team is before you go into the effort, because you've got to have people that can I would imagine adjust to that and be able to be honest with those decisions too.
Absolutely. And what a lot of companies that do this very well have done is similarly, in that when we talked about developing that little working group and going, okay, in 3 months' time, what's the milestone? In 6 months' time, what the milestone is. One of the things that they've done is literally mimic what is it going to be like when we don't get to see each other for 3 months, right? And they will distribute the team. If they haven't, they already don't operate a distributed team. They'll distribute a team and go, let's see how this works, and can we work remotely, and what does it look like when we're mostly just on video calls? And guess what, when the time difference is X, which is why also when you think about where to expand, we talk about the East Coast and some of the benefits of the East Coast over the West Coast, because time differences are going to be a challenge. And now remember, you might have to add 24 hours to any decision you would normally make. What does that feel like? And so they do try that out and go, okay, where do we find the kinks? What works? What doesn't work? Are things falling apart? Did we miss something? Is there any conflict coming up? Do we need to have an internal wiki? Do we already have one? And you can make it a really creative and constructive and exciting process that actually can make even your domestic business better, right? Because now you've also learned best practices on flexible and remote working, and you can create new ways to sort of bring people together. But again, these are steps that must be thought of, and processes that really should be taken seriously, because the impact is substantial.
Yeah, absolutely. So I can already see that we're going to need to do a part two of this, because I have a zillion more questions, but I want to be fair to our guests online. I know you wanted to make a few comments on fundraising. So yeah, please do that, and then we'll get to our audience questions as well. So what are some of the things that you recommend with regard to making sure there's strong cash availability and good fundraising?
No, absolutely. I think that one of the most important things is to remember that, if we're really talking about getting funding from investors, or getting either a subsequent round to do the international expansion, or using capital that you have from your current round to do that expansion, uh, you have to be incredibly mindful as of what investors consider to be the tactical milestones for a successful next fundraise, right? Because the bar keeps changing. And I think this is something that a lot of entrepreneurs sometimes don't understand intuitively. And they don't understand that by the time this much money came into the company, not all progress is made equal. Because what they'll say is, look at how much we did with it. Look at all of the things that have happened. Look at all of the progress that we made. But if there isn't a direct match between what we consider to be critical milestones to convince investors that now the next stage of scale up is going to be successful, you're going to have a really difficult time fundraising, which is why, again, that is a question that also comes to bear when you think about internationalization, right? Will the internationalization help you, or will it actually hinder you in that process of thinking through what milestones you need to achieve? Especially because if one of the things that we are counting on is the fact that you want to build a global business, and part of your story to investors is going to be that once you expand to all of these other markets, and we'll just, put the US into that bucket, and this is a vision and an idea that you can keep counting on. Once you do it, if it fails, that will be over. Right. So now this idea of we're going to execute on these additional markets, and a lot more of our growth is going to come from expanding to all of those places, is going to be put seriously in question, which is why you also need to be careful about, is the timing of doing that really right? Right. What most people forget is that if you are executing really well, and if you're growing in your domestic market at a pace that investors like to see, you're going to be the creme of the creme no matter what. And so focus is super important, because even though, again, same as the journey, we have a story that's a final story, but I want to understand, if I took the train from here to here, you got here, now what are you going to do? Oh, there's a bus, and then after the bus there's a boat, and then after the boat there's a plane. And I know, yeah, like we all agree, I understand where you're trying to get, but do I really trust that you're going to get there? And what you need to remember is that I'm much more focused, and I'm thinking much more closely about what the next set of milestones is going to be, to prove that, so that I should give you another 18 months of runway, and then we're going to repeat this time and time again, right? The other thing that's important to remember is that, again, if you need to fundraise, that process might take a full 6 months. So if you have money today, you have to say, when do I need money next? Backtrack 6 months. That's when you need to have already proven all of the things that I want to see, because otherwise we're not even going to start the conversation. So focus is key.
I remember when I was doing my MBA, one of my professors who I really loved would say, "You always want to look for money when you don't need it," and I see that as sort of a more rare attribute with many companies, is they sort of look at the look in the receipts and the till, and oh, we need to fundraise again, as opposed to, as you're talking about, making it a much more strategic operation. It sounds like they're really two kind of unique sides of this. One is sort of the company's milestone and the map of milestones and being appropriate and accomplishing those, but also that the capital markets are dynamic and what's in favor or in vogue today, it may not be tomorrow, and you're also in a competitive environment. So your investment opportunity is competing against thousands of others, and ultimately, investors for the most part have sort of one goal, which is ROI, right? And so it's
Correct.
how does your investment weigh out versus what else is currently available in the market? Is that kind of a
No, I
reading?
think that summarizes it very well, and that's the thing that I think a lot of folks sometimes forget is, remember, we are seeing all of the outcomes of all of the companies. So even if yours are excellent, it's a relative measuring stick rather than an absolute one,
Right.
and that's why keeping the pulse of, what's the plan? Let's focus on, and honestly, to the extent, I mean, if you are in the group of innovative companies and startups and scale ups that manages to meet your budget, you are already sort of, again, top 10% of everybody that we see, right? And I think that there's always this ambition to do more, to go for more, and yet, part of what we're looking for is also just the sense of how realistic are you in ensuring that you understand the complexity of the decisions that you're making, and are you going to be able to manage them moving forward. It's a delicate balance between being still, like, you want to be as ambitious as you can be and you want to drive for as much as you want, but it's that idea of what comes now versus what comes next. And the magic of the really great entrepreneurs is that they're able to balance the two and sort of create momentum, such that the moment the next little bit thing has been proven, you throw more fuel under it, and then you grow that a little more. And of course, we're always trying to balance, and there'll be some risks, and we might lose some money along the way as we're trying to figure things out. Everybody understands what the process is like. But of course, the more you can de-risk it by having more information and by asking better questions, the more successful and the more leverage you're going to have in that process.
Brilliant. All right. So because we have an audience and it's just not you and I talking, we probably should get to some of their questions too. So let's see. I'm just going to pop into these. We did talk about the timing of market entry. Is there anything, one or two quick rules that you might suggest with regard to how to properly measure the timing?
So if I had to summarize it, it's really go early, go late. If the US is your primary market, just sacrifice Europe, come and settle and say, this is what we're going to do. Otherwise, stay put until you've been able to prove that repeatability, build a domestic management team that can support the business, and then you're no longer betting the house, which is where the go late is. So for me, it's really below $1 million in revenue and above 10 million in revenue. The middle, very vulnerable, very challenging.
And maybe do one or two test international expansions before the US to hone that skill.
So
Or not necessarily.
again, it maybe, but maybe not, right? Like, I don't think that is a necessary step. As we said, if ultimately what you really want is to get to the US, it's funny because I have sometimes these conversations with my team is, if ultimately I want to get there, just try going there. I mean, maybe, you might not get it, but you might. So if the US is the market that you want, by all means, test it from Europe, be disciplined and diligent about what those milestones are, and then move forward. If internationalization is really, if we've already identified that internationalization is what's key for you, because whatever reason, right? Your domestic market is so small that you can even prove product market fit, that I doubt that. But, maybe you'll be able to convince me that that's the case. Like, your domestic market is so teeny tiny that there's nothing to do here, and we'll try to internationalize. Fine. And then we realize the US is a really tough market, so that let's look at another one. But I do think that by and large, for those initial stages, you can grow to be, to a significant size, like a few million in revenue, and have a more well-established domestic practice without, pretty much anywhere. So it also, because if you think about the way the technology is executed today, right? There've been so many cataclysmic changes that have happened, right? You no longer need to build a server farm yourself. You can do everything on the cloud now. Advances in remote working have enabled you to hire talent in most other places. Markets that are very small already think internationally. So one example, for instance, is Israel, right? So their innovation scene is super dynamic, but that's because even though they're based there, they're in effect behaving like an American company already. They're already thinking, they're building for an American customer. So for me, the key is not even where you are physically, it's more which customer are you really talking about serving, which market are you going to become sort of an expert in, and which is the place in which you want to sort of become a leader.
Hmm.
And that doesn't require the geographic presence.
Cool. This question will get us into kind of a new area, which will be fun. So we've talked about sort of some of the hard, more of the sort of the very tangible type issues with regard to expansion. This question is, how are the approaches different between the US and the UK? And they're really talking about in the context of business mentality. So, we've got all these hard, very tangible things we're talking about, but how about the soft stuff and getting uh, as you said earlier, the right culture and whatnot to translate, or even the right it could even be the language, where what did Winston
Yeah.
Churchill say, we're separated by a common language.
No, absolutely. I think that that's a super important point. And I think that sometimes it takes people coming over and being here for a stretched period of time for them to actually appreciate that. Whenever you try to tell them, they're like, yeah, well, I don't believe you. But, we have a section that we call sell, can you sell like an American? And the idea is, what I like to encourage entrepreneurs to think about is forget everything you learned about the US. Pretend you were expanding to China or Japan, right? How would you behave then? What would be the things that you'd take for granted? What would be the things that you would question? What would be the things that you try to learn? And the challenge that we have is, again, because the US feels familiar, people skip that step of recognizing that it's an incredibly different culture, right? From everywhere, from everything, like, how informal we might be in conversations, the value of small talk, what next steps in negotiation looks like. When is it that people are strong arming you versus when is it that they're saying no and being polite? It's really interesting because some of my companies will come over and they'll be like, oh my God, we had this meeting in New York and it was the worst meeting. Like, they were so aggressive. There was like no small talk. They were really kind of cold. And then the next day they'll write to me and go, and they signed the contract. I'm like, yeah, because they just wanted to do business. That was it. And then they'll go to LA and you'll be like, oh my God, they were so nice. They were so wonderful. They offered us coffee. We chatted forever. They were super friendly. And then those people are going to stall them for a number of months because they're being polite. Now, I'm generalizing, and it's not just this, but I think it's important for people to understand that the entire web of the decision making, the pace of the process, how much information ahead of time you need to give people versus how much of it is going to be relationship based. I think particularly in B2B, Europe is still very relationship driven in terms of how it manages sales and it manages those contracts. In the US, we're starting to see a lot of that breakdown insofar as people are becoming much more value oriented. The buyers will do their homework beforehand. They'll understand exactly what you're talking about. They'll have very defined criteria. If you don't meet those criteria, you're out. Doesn't matter how nice you are. And so being able to navigate that and understand, where to spend your energy is something that's really important, because what you don't want is to be misreading a situation and spend a lot of time spinning your wheels with contracts or conversations that are not going to happen.
That makes sense. We're almost at the end of the hour here, and I'm conscious of your time and the audience's time. I'll negotiate with you offline about maybe coming back, because I think there are not just, I think, a lot of good questions, but this is it's a major issue for a lot of companies, and we certainly are talking with and working with companies that this information is really it's just great. And I think I would close on two things. One is, how do folks get, and I know you've got an electronic version of this. Is it okay if I share the link for folks?
Absolutely, please
Okay.
do. I would be delighted to have everyone take a look at it, give me any feedback that you might have. That would be fantastic. So if you go to octopusventures.com slash question dash the dash questions, you'll go straight into the landing page for it. You can download it right there. And yeah, I hope it will be useful. The PDF is actually also interactive. So you have all of the resources that are named in the book. You're going to have links, and you can click through it and find a number of resources that I think are going to be useful for a number of folks that are thinking about this expansion.
Oh, that's great. And so everybody knows, later on today, you'll get an email with a link to this webinar in it, and we'll include with that the link to that Priscila just referenced, so that it's easy to get to without all the dashes and all that stuff, which I would mistype 6 or 7 times before I would get there. So this has been great, Priscila. Any, I guess is just a final reflective thought, is, thinking about market entry, whether you're sort of launching in a new company, or so I'm sorry, launching in a new country. It I know it doesn't come down to one issue, but are there sort of a top 3 that you look at? I know you said number 1 is product market fit. What's next on the list? What are the next 2, would you say?
So I'm sorry. So tell me more about the question. Do you mean in terms of deciding if you need to go international or implementing it well?
Yeah, I would say, let's just say you're going from the UK to the US. So, if you had and obviously a very general question, but you put very much number 1 being product market fit. What are 2 and 3? And again, very general question, but what would be the second and
No, so
third?
so 2 is really going to be team.
Yeah.
And again, ultimately, particularly in a scale up situation or early company, it all boils down to the people that you have. So team is top, right? Sort of having people that are going to be, open-minded to the challenge, that understand, how to build alliances, how to ask the right questions, how to get under the skin of what's really happening, and build allegiances. Because ultimately, this is the missing point for a lot of foreign companies that are trying to enter the US, is you don't have the benefit of being embedded in the culture and having these soft networks of access, of reference, of insight. And so I think that is really, really important. And then finally, I would say it's really about a really strong point of view, right? What you're bringing has to be different. It has to be materially better, because remember also, as a consumer, though, again, if it's a B2C, a little less, but suppose I'm an enterprise, as a consumer or as an investor, the reality is I am looking at you and expecting you to be better than everything that's local. Because if I'm a customer, I'd much rather sort of go through the process with someone that I understand, relate, that understands me, and that I know is investing 100% of their resources on my market, because that increases the probability that they'll be here to service me and my product moving forward. Similarly, for investors, like if I know that you understand the market and I am also close to you, odds are I'm going to pay a lot closer attention to you. So the challenge that foreign companies have is that sometimes they think they need to be on par with American companies. And the truth is, you're really going to have to be better. And so really have, again, a strong point of view or strong differentiation, a piece of thought leadership that's really quite different. Like all of those are going to be sort of an important third element for you to bring.
That makes sense. Well, that seems like a perfect point to conclude on. And again, so everybody knows, I'll be negotiating with Priscila for a follow-up. But you'll all see an email from us later on today with all this information in it, so you can easily access it. We'll actually be doing some blog posts based on this as well. So with that, let's conclude. Priscila, so great to have you on today. I really appreciate it. And again, look for my negotiation.
No, sounds good. Well, thank you so much for having me, and thank you everybody for listening. It's truly a pleasure, and I'm in awe of all of the folks that want to undertake this challenge. And if you do succeed, the prize is quite amazing. So I hope you don't walk away discouraged. It's more just this notion of let's try to do it right.
Cool. Well, we'll also take a look at the questions that were submitted online, plus the ones that were pre-submitted for any we didn't get to, and make sure those become an agenda of a future webinar, and we can certainly address probably many of them virtually as well. So
Sounds
thank you
great.
all, and thank you, Priscilla.
Thank you. Have a great day.